Good morning, good afternoon, good evening. Whenever you are watching this, the glare on my glasses is crazy. But hey, y'all, I'm back. We missed last week. Y'all had to regroup from taking my Girl Scouts camping the week before, and it took me a little bit longer to regroup than I expected. However, I also been doing some research for y'all because I needed to understand what was going on. Now, we all now know that the bill, we just gonna call it a bill because we not gonna 1BBBA 25 30. We not gonna do that anymore. For those of y'all who are like, who is this lady that ended up in my mailbox? Y'all is none other than Patrice Elberry, EA. And that EA stands for Enroll Agent. I am here to break things down for you in a regular basis. Y'all let me know. We're going to take some of this stuff and we're going to put it on our YouTube channel. For those of y'all who did not know, I did have, and I do have I do actually have a podcast that I have not been podcasting because I've been spending so much time for the last 18 months actually doing these weekly videos for you all. But we're going to take some of that content, put it on my YouTube page, and I'm going to get back to the point where we do my Talks with the Tax Cop podcast. That podcast really exists because I wanted an opportunity to have conversations with my clients that are small business owners because my heart's for the small business owner. Yes, I do individual taxes. Yes, I work with people who are not business owners, but I have a lot of clients that is like, I kind of want to take the plunge. I don't know how to take the plunge, and I'm starting out, and I want a good foundation, and I can talk that plain. I can talk that plain with them. So, based on that, I do have a podcast that we gonna start back up. We're gonna do some stuff. We've been working some stuff behind the scenes for y'all. We got some stuff that's gonna, you know what I'm saying, over the next month or so, gonna start to pop out, and then you're gonna be like, oh, she actually been behind the scenes doing some stuff, researching and developing. This all ties in. Y'all know I got a way to do some stuff together, but in the meantime, because I have been doing this, I've also been very, very curious about the R&D tax credit. I've been curious about it for a while. Need to take more training on it. But today, y'all know I'm going to go to the source. The source. The source. And the source is we're going to the IRS publication. Where are we going to actually end up putting this credit on people's tax forms? Because I want to understand it from the tax side. I've already done some research understanding it from the accounting side and understanding normally where it would end up on the financial statements so that I can actually properly account for it on the taxes. However, my biggest thing was, well, who qualifies for it? Because in every business, somebody is doing some sort of research and or development to get their product, their service, etc. to market. And so therefore, I wanted to know and I wanted to share what the IRS definition is or who they looking at qualifies to be able to receive this credit. Now, just because you can receive the credit or not receive the credit does not mean that you do not qualify for these expenses to take place in your company. I'm going to say that again. I've already kind of put the caveat, laid the foundation. Every business has some sort of research and development that they're doing. That's why I did that long lead in with what's been going on behind the scenes, right? We are developing products. We're developing courses. It's some sort of research and develop going on, right? And so there are costs associated with these things. But all of us did not lobby for this. I'm going to let y'all hold that one. All of us didn't lobby for it. So I need for you all to know, hey, I'm hearing that this was going on in the bill and now we can do this and I can expense it and yada, yada, yada. But if the rule don't apply to you based on what the IRS say, then the rule don't apply to you. For us to take it as a deduction or expense or amortize it on your tax return. So you got to understand there's a difference between accounting and what ends up being reported on the tax return. So for financial statement purposes, to qualify for certain things, if you're going to go get loans, you're going to go get investors and stuff like that, certain information may end up on your financial statements or even in the notes to the financial statements that explains the numbers on the front of the financial statements. However, That does not mean that all of that stuff ends up actually being reportable on a tax return and or allowing you to qualify for such said, in this case, research and development credit. Long way to get you to this point. So what are we gonna do? Yours truly gonna share the screen because we getting ready to go through the instruction. Why? Because rules have changed, but the instruction exists, and there's a lot of comment because they knew this was coming down the pike as to how they were gonna do stuff. Not me, them. Okay, so them being peoples. Okay, I'm so glad y'all can't see my face, but we're gonna talk about this instruction. Let's go through it. The reason why, and this is publication, or not publication, boom, boom, boom. Publication are bigger. It's different layers and stuff, right? So the research and development tax credit is the same thing as the credit for increasing research activities. Let me let y'all see my face, okay? Because I had to go do some research on it. The R&D tax credit actually is the same thing as the credit for increasing research activities. That's why we're using this publication. I don't want nobody to say, well, that don't say research and development credit. It's the same thing. All right, so these are the instructions to fill out that form on your tax return to see if you actually apply. Okay, so let's look. All right, we doing the things. All right, we're doing the things. All right, so use form 6765 to figure and claim the credit for increasing research activities, to elect the reduced credit under section 280C, and to elect to claim a certain amount of the credit as a payroll tax credit. What? Payroll tax credit? You mean for my employees that are doing this? I may be able to get a credit? Huh. Let's read further. Against the employer portion of Social Security tax. Now, y'all, they done made that convoluted. Okay? Making stuff convoluted. This to the square, to the take it, carry it over, carry the one. Partnerships and S corporations must file this form to claim the credit. I'm going to say that for the people in the back. Partnerships and S corporations must, that's a requirement, file this form to claim the credit. All others are generally not required to complete or file this form if their only source for the credit is a partnership, S corporation, estate, or trust. Instead, they can report this credit directly on form 3800 general business credit. However, if you are an estate or trust, the credit can be allocated to beneficiaries. For details, see the instructions for Schedule K1. What did I say? Know your freaking business entity. That's what it said. Because certain entities are going to be required to complete this form. Others, doesn't mean you can't get the credit, but it's going to happen in a different way. All right? And it's going to be interesting for those people that are investors. You know what I'm saying? How that information gets carried over and carried on to their tax returns. If you want, you got somebody who's a startup and they got to give you certain information, like this is going to be interesting. Really interesting how it gets reported. The tax nerd is getting ready to come out of me. I understand. I'm doing a weekly video. Let's keep it there. All right, because we're going to have to break this down into a series. All right. Let's look at the definitions. Why? Because definitions are important. The research credit is generally allowed for expenses paid or incurred for qualified research. Qualified research means research for which expenses may be treated as Section 174 expenses. This research, often referred to as the 4-part test, must be undertaken for discovering information that is technological in nature, and its application must be intended for use in developing a new or improved business component of the taxpayer. So it's technological in nature, usually, and must be for a new or improved business component of the taxpayer. All right? And the reason why I was researching it, because I was like, for the longest time, I only thought this applied to software people, but we get ready, people who develop software, tech people, or, you know what I'm saying, Silicon Valley. So we're really trying to figure out, can any of the rest of us, because remember I said we do have research and development components, do any of the rest of us be able to get some of this? All right, so we gotta have, it's gotta qualify for a new improved business component. In addition, substantially all of the activities of the research must be elements of a process of experimentation relating to a new or improved function, performance, reliability, or quality. These tests to determine qualified research must be applied separately with respect to each business component of the taxpayer. Know your business activities. That's what that means, okay? The research must rely on principles of physical or biological sciences. Now, come on now. Now, this is telling us who. What is our research? Biological sciences, engineering, or computer science. What? But I just said that the rest of us do some research and development, even if we're not in these areas. So we're looking for ways to figure out how we can leverage this, if at all. The application must be useful in the development of a new or improved business component of the taxpayer, and substantially all activities of which constitute the elements of a process of experimentation for a qualifying purpose. A process of experimentation must be an evaluative process and generally capable of evaluating more than one alternative. To satisfy the process of experiment requirement, a plan involving a series of trials that will test, refine, retest, and analyze the data is required to constitute experimentation in the scientific sense. Cost of developing a new or improved business component must be for true experimentation in a scientific method or a laboratory. So cost of a development has to be undertaken to develop, test, and choose among viable alternatives. Now, let's see who's excluded. The research credit isn't allowed for the following types of activities: research conducted after the beginning of commercial production, research adapting an existing product or process to a particular customer's need, duplication of an existing product or process, surveys or studies, research relating to certain internal use computer software, research conducted outside the U.S., such as, or a U.S. territory, such as Puerto Rico, research in the social science, arts, or humanities, research funded by another person or government entity. All right? So, I'm coming back on the screen, y'all. Didn't I just tell y'all that laboratories and pharmaceutical drugs and software people are not the only ones who do research and development in their companies? Now, I got some clients that's building software and stuff like that. I am going to deep dive into this further, but we now looking and seeing, well, who qualifies and who does not, and how did they get to just this, and how come these are the only people that actually can do something with this, and why and where? This just leading us to asking more questions, and the tax cop doing more research to figuring out, well, who can and who can't, and how they can leverage it. Now, my software clients, y'all, we definitely gonna talk about how we leveraging this. Some of y'all, we are already doing some of this, and we're amortizing your stuff while it's in the different phases of development. We're already doing the amortization. They said we can expense it, but I ain't gonna lie, I like amortizing it, because I don't like to use everything up unless we know we're gonna put some more stuff behind it. Okay, that's me. I look at the client and determine which one is better. Am I expensing everything? This is just like depreciation. Am I expensing everything in the first year, or am I going to actually just appreciate it over its useful life? Which one is going to give us a better tax benefit? That's tax planning, y'all. So that depends on who my client is. Okay. Now, with everything else, I'm like, wait a minute. How do we get it so that, is there a way for us to get it? Because everybody is using, let me not say everybody. More and more people are starting to use AI in their businesses. More and more people are starting to leverage certain things. Now, this talked about being in the lab and stuff like that. My office is my lab. I be trying stuff out different times. We know that people, when they're doing marketing, and these are marketing expenses, when you do an A test and a A ad and a B ad, and you A and B test it, that's falling under your marketing expenses, not necessarily your research and development expenses, even though you are doing research to figure out which one sticks to the wall, right? And so We need to really figure out how this qualifies. We got to dig deeper into this so that I can see who it can apply to, what it doesn't apply to, because some of you all are starting to build some proprietary software to do what it is to help you in your businesses. And so we want to keep this stuff in mind as it comes to the forefront because this is not going away. Now they leveraged how some of this is going to be done. But then I also said some of y'all may be investing. You get some money and you're putting capital in somebody else's stuff, and you want to be able, like, it's going to take a minute before you can see it come into fruition. So you really want to see, well, do I get some leverage from that in some way, shape, or form? Or is it just to that business owner or to the business? How does the taxpayer that's putting some of that cheese in to be able to keep funneling the research and the development before it goes to the forefront? How do they get to leverage this? These are all the questions that kind of spin in my head and do certain things. And so we're going to deep dive into this further. I'm going to take y'all on that journey. I know y'all probably was like, she geeked out on me. She geeked out. Now, this is a big credit. I'm going to go back. I'm going to break it down. I just wanted to start, and y'all know I like to start with the publication before I kind of go and do my own presentation on it and break it down in plain language so that we can have some examples that we can use, that we can't use, who can qualify even further, who can't, and if I do qualify, what things do I need to do? And if I want to qualify down the road, how do I get to a position? Is it even worth it to go there so that I can leverage a credit? How much money is it really going to give me? Is it a dollar for dollar credit? Is it a percentage credit? All the things that go on for tax purposes. I want you to be aware of what's out here versus what is not out here so that we can be able to make sure that we bring the information to you so then you can make a decision as to now what do you do next. All right, so next week we'll dive a little bit deeper into it. Who does it, right? Whose business is eligible, because this is going to be interesting, right? For small businesses, and if you're giving capital for somebody because you believe in a product and you like, look, I'm gonna be I'm gonna be an angel investor. What happens with that? Those type of things, because some of y'all, that may be some of y'all situation. Some people, that's not their situation. Some people want to get into a situation like that. Do I get a tax benefit for doing something like that? And how can I leverage that? Okay, so until next week, y'all, we go back down and we go down the rabbit hole even further. Peace. Now, if there's some topics that y'all want to know about, this one has been intriguing me, and I'm going to be all in it, right? I'll be breaking down some other topics that I'm interested in because now they're not going away, they're coming forward. So I'm like, well, how can we start to have these conversations where we can actually leverage some of this stuff, and who does it benefit and why? And how do you get yourself to a position where it could be beneficial, but we're gonna talk about the real cost in it, because you may spend $100,000 only to get a $10,000 credit. Does that work? Is that necessarily worth it? You understand what I'm saying? Y'all probably like, it's a round number. Don't people be like, Patrice, you're talking about my ballpark. I'm giving this information to you all because sometimes you're like, oh, I got some capital. I don't want to pay taxes on the gamble. I got a profit. What do I do? I'm going to leave that there. Until next week. For real. Now, I'm leaving. I'm leaving.